Moving on. James, after a year of rising inflation, interest rates rising, what do you think could happen next year?
Well, as we coined the term Table Mountain rather than the Matterhorn in our annual report that was released before the Bank of England chose to borrow that term, I mean that's very much what we've been thinking about in terms of interest rates. You know, we had a very steep rise. We're now on the plateau, and as Andrew Bell articulated very well. You know, that plateau doesn't need to be flat. So, in other words, we do expect interest rates to come down very gradually. It's really important that with the inflation picture improving, that central banks are able to focus on the imperative of trying to enable them and governments to boost growth, because there's a lot of debt in the world, and so economic growth is a great medicine for that. I think central banks will be patient. They won't remove their 2% target, but they might be prepared to act. In other words, to gently reduce rates way before we hit that 2% target in an attempt to help deliver this soft landing. If we're right, then that could be a very attractive environment for equity investing, with the usual caveats, obviously, that things can change, and markets don't necessarily interpret the environment around them in the way that you expect them to. And in addition to that, I would echo what Alex was saying. Actually, I see a triple whammy, not a double whammy, because in the investment company space, there are some very cheap assets that you can buy into through discounted investment trusts, and there's sometimes some gearing as well. So, if we're right, and there has to be serious caveats on that when you're talking to people about the future. If we're right, there are likely to be some really interesting opportunities in equity markets and through the investment company space.
Well, let's hope you're right, James. I have to say, I like the idea that we haven't got a flat tabletop now at the mountain. It's gently sloping down as we get some rate decreases coming in, some cuts, which obviously would be beneficial for equity investors.